Hi everyone, it's Sean from STK Markets here this morning. I've got John Forwood from the Well Resource Fund here today. We've worked a long time with John. We've supported his previous placements, and it's been a top performer for us. But it's good to see you, John. Welcome, and where are you at the moment?
Coming to you from Zurich, the Mining Forum Europe put on by the Denver Gold Group, which has been on for the last 2 days, and we've got the last day again tomorrow when I'll have the opportunity to make a presentation to the conference.
That sounds great, John. That's pretty impressive. How did you get there? Are many people presenting, and who's involved?
Yeah, look, the fund was invited, one of five keynote presentations. So, look, there seems to have been some pretty good interest, both from domestic Swiss investors and from institutions from around the world, mainly the Northern Hemisphere. Quite a few from the US and Canada.
John, we're big supporters of your fund, as you know, and it's been an interesting couple of weeks in the markets. What do you think of what's happened recently and where the markets can go to from here?
Yeah, so it's been a tumultuous month or tumultuous March and into April with the Iran war, and certainly there was a big retracement in junior resources and in a lot of commodities as well. But gold in particular has bounced back very strongly, and that's what actually happened in other crises. So we saw that happen in the GFC in 2008, and we saw that happen during COVID as well, that gold got hit early on in those crises, but actually outperformed as time went on. And that's sort of what's already been happening during the Iran war crisis. So if you want some more information about what was some of the early outcomes from the Iran war crisis, we did a webinar which is up on the Lowell Resources Fund website, which viewers can go and have a look at, which covers a lot of different commodities and how they have been affected and how they might be affected in the future. So please go and have a look at that if you've got a chance.
That's great. Thanks, John. Listen, you've been doing this webinar series, which we've found very highly informative. They run quite regularly. I've put some information up on the webinars that my investors can join. They go in depth in different commodities. There's different themes every time. But John, the last one, which I had the fortune of watching last Friday, it had 3 commodities in it, which I found really exciting. And with what's happened with the war, there could be some opportunities there. That was helium, sulfur, and aluminium. Do you mind going through those for everyone that's watching to give your thoughts on what's happened with this supply crunch through Iran, the Iran and the US war, and where things can go to from here?
Yeah, Sean. Look, very pertinent. Those 3 commodities have been immediately affected by the Iran war and the closure of the Straits of Hormuz. So helium, 30% of helium was coming out of the Ras Laffan LNG plant, which has been hit by Iran drones and seriously damaged, and some estimates put the rehabilitation and repair of that plant at 3 to 5 years. So that plant was producing 30% of the world's helium as a byproduct of LNG, and so we've seen 30% of the world's helium go offline. And helium is used for many things, but perhaps most importantly, it's used to make semiconductor chips, which go into laptops and all sorts of things. So there could be some serious pressure on that industry and the supply of chips. Aluminium has also been affected. The shipping of aluminium metal itself, the shipping of alumina to refineries or smelters to make aluminium, and the shipping of bauxite up and down the Gulf through the Straits of Hormuz has basically been cut off. So I think we could see something like 5 to 6% of world aluminium supply curtailed. So that's a pretty serious number as well. And then sulfur, which perhaps has the most far-reaching effects. Obviously, sulfur comes as a result of refining crude oil, and then sulfur is used to make sulfuric acid. And sulfuric acid is very intensively used for producing a number of commodities, most particularly uranium. Production requires a lot of sulfuric acid, but also nickel production, the HPAL nickel production out of Indonesia. Indonesia's supplies over 50% of global nickel, and they require a lot of sulfuric acid to process their lateritic nickel ores. So I think, the ripple effects, that's just sort of first or second order ripple effects, but we're going to see, more and more as time goes on. So yeah, watch this space, and fascinating if very troubling times. Copper's another commodity which is about 20% of global production, requires sulfuric acid for SXEW production. So we've got I think about 18% of the portfolio exposed to copper. So I think you could see the copper price starting to move. And we know just as we speak today, we've seen movements in the copper price and the nickel price, and we have been adding nickel positions this month as well. So yeah, look, and we're actively reviewing opportunities in helium, and we do have, we're an upstream fund, so we do have investment in bauxite, an Australian bauxite project. So we could see interesting bauxite. It's can be affected by the aluminium curtailment in the Gulf, but also what's happening in bauxite is the potential for Guinea, which is the world's biggest exporter of bauxite, to put on export restrictions. So yeah, watch that space as well. There could be some could be some price pressure in the upwards direction on bauxite.
John, thanks so much for your time. You're obviously busy presenting all the way over in Zurich. It's great to see you always looking for opportunities, always looking for what's happening. That's one of the reasons why we have backed you for many years now. Obviously, it's been great. We've invested alongside you with our investors. You were fortunate enough to cornerstone Southern Cross for us, which we all know how that went. It's just getting better and better and deeper now, which is great. So thank you so much for your help, John, and we look forward to continuing the dialogue with you and keeping our investors informed of what's going on.
Thank you, Sean, and also thank you very much for your support of the fund. You've been a very loyal and consistent supporter of the fund, so hopefully we've got some good times ahead.